The easiest way to win more trade is simply by understanding chart patterns. So chart patterns are simply signals that every single candlestick on your chart is literally sending to you to tell you if you should enter the market or not. So a lot of people have been contacted, a lot of new traders have been asking me that how do I detect when I enter the trade? What tells me the reason to enter the trade? What determines how I enter the trade? How I set my take profits and stop loss? But all of those actually boils down to the particular chart pattern you watch out for when you are trading. And in this video, I'm going to share with you 4 of the best bearish chart candles that you should watch out for whenever you are trading. Trust me, be you a swing trader, day trader, or just a scalper, trust me, all these 4 trading strategy, all these 4 chart patterns I'm going to share with you are likely to occur every single day regardless of the market you are trading. Trust me, these are the best chart patterns that you need to know to actually make more profit from trading. So if this sounds like you and you need more great content like this, then kindly smash that subscribe button, like this video, I'll take you straight into today's video and share with you these 4 best chart patterns that you need to know if you want to make more money from trading. So without further ado, I say let's get straight into today's video. So before going straight into today's video, first of all, let's understand what exactly a chart pattern is. And over here, from my own description and how I understand chart patterns, simply, chart patterns are signals that shows if the market is continuing an uptrend or is simply changing direction. So in an easy understandable way, chart patterns often signal transmission between rising and falling of trend. So chart patterns are mainly formed by trend. So once you see each of these chart patterns, then they are telling you that it's either the market is about to change direction or it's about to continue the particular direction it's traveling. That's simply what to understand in a chart pattern. And when we get started into today's video and I start showing each of these chart patterns, you will get an easier understanding of what exactly I mean by chart patterns shows you the direction of the market. So the first on our list is called the hanging man. So the hanging man is one of the best chart patterns when it comes to trading market trend. So if you are someone who trade market trend, trust me, the hanging man is something you should always be looking out for. So the hanging man always comes up to tell you that, hey, bro, the direction of the uptrend is enough and it's time for the market to change direction. So for example, here is a snapshot. So this is actually a snapshot, not a real trade, because today is Monday and I can use the real market as an example. You can see I'm trading the real market live right now. So I can use it as an example because there will be a lot of direction changes. So here's what it looks like. So the uptrend, the hanging man body is always small with a very long wick. The wick is to tell you that the buying pressure is low, that the sellers are coming into the market. However, once you spot the hanging man, doesn't mean you should jump into the market. Before you enter the market, wait for the next 1 to 2 candle, because as long as it's 90% accurate, remember I said 90%, meaning that there's still 10% chance that it might not be accurate always. However, in most of the times that you see a consistent uptrend like this and you spot an uptrend, a hanging man, that's to tell you that the market is about to take place. The market is about to change direction. So highlighting it out for you, here is it in this middle here. You can see this is it in this middle. And you can notice that the body here, the wick here is 2 to 3 times bigger than the body, and this to tell you that okay, the buyers are losing pressure in the market. They've taken control of the market for quite a long time. And if you can take a look at it, you can see the buyers took the market all the way from this level to this level down here before the hanging man appears. And the moment it appears, you can realize that another bullish symbol came here, that okay, the market is about to take an uptrend. However, this one thing you need to know, that always when you see a bullish candle like this with a long upper wick, it's telling you that the buyers are already weak in the market. So when you are trading, so if you are trading using the hanging man pattern, always watch out for the hanging man, and the moment you spot it, wait for the next 1 to 2 candles before you enter the market. You can see if you are a beginner trader, you are likely to enter this market as a bullish market because you spot a bullish candle here. However, with the uptrend, this is how it mainly comes. It comes in a way to actually confuse you so that you trade the market wrongly. But in reality, you have to wait for the next 1 to 2 candles. If you can take a look at it, take a look at this big bearish candle that came up here after the small bullish candle. So whenever you are trading and you spot the hanging man, always wait for the next 1 to 2 candles before you enter the market. So for example, let me show you one thing I did here. So over here, this wasn't the hanging man. So I woke up this morning and I spot this market to be at this level. So I woke up this morning to meet this market at this level, which is the GBP, okay, Swiss francs, and then Japanese yen at this very level. Then I mark it out. After I spot the level, I mark my tops and bottom at which is often called the support and resistance level. So this is what you need to do in trading. Once you spot your places, you need to mark them out before entering the market. Like for example, after I spot it here, I know this was in between line, which is there's no good space here to enter the market. I had to wait for the market to get back to this level before I entered it, and then put my take profit down here. This is how I trade, and this is how you should also trade. So once you spot a market moving in a particular direction, you shouldn't be in a hurry to trade the direction until you see a good entry point, and I'll be covering that in my further videos. So you can see the same thing here I did with the British pounds, and then Japanese yen. You can see over here I haven't entered the trade yet. I just mark it out. So I'm waiting for this market to come and hit this level before I enter. So even though I'm trading, if I'm trading with a hanging man and I spot this hanging man, I won't still rush into the trade until I get my confirmation. So that's it about the first one here, called the hanging man, which is one of the most popular patterns that you often see in an uptrend that is about to change direction to a down trend. So the second one here is actually called the evening star. So the evening star is a chart pattern used by technical analytics to detect when a trend is about to reverse. So when we're talking about trend reversal, this is to tell you, for example, you are trading a market and then the market keep going upwards, upwards, upwards. Then it gets a particular point whereby it can no longer go above it, that you have no option bet to reverse. However, this doesn't happen at every reversal point. Like for example, if I should come over to this trade, you can see this market coming over to the past. You can see this market took a very serious uptrend at this level. It did not create any sort of evening star or any sort of pattern before it took its reversal. So this one doesn't mean that at every turning point you are going to see a market reversal. Over here also, it did not create any point before it reversed. However, in most occasions, when an uptrend is about to reverse to the down level, it often shows a pattern here which shows that, okay, the market has gotten to a point whereby it has to reverse. And let me show you exactly what this sort of pattern means. So in reality, this is what the evening star looks like. So it's already highlighted, so let me just highlight it more for you to see. You can see this is it here. So the evening star often comes with a very long upper wick and a shorter down lower wick with a very tiny body. So this to tell you that, okay, the market has gotten to a point whereby the buyers are losing power. So that's why you see that the wick is very long. So once you see this sort of long wick, be it up or down market, that's to tell you that the buyers are already losing powers and the sellers are about to take over. So this same thing happens with the evening star as well. So once you spot this evening star, this doesn't mean that at every point you spot it, you should get into the market. Always wait for confirmation. So when it comes over to evening star, the best way to know your confirmation level is the second candle. So when I talk about the second candle, is for if you are trading candlestick, then this will be much easier for you to understand. So you can see that after the evening star appeared, a very big bearish candlestick came over here, which already goes below the usual one. You can see that this bullish one is at the top here, and the bearish one goes below it, which came to hit the wick of the next bullish market over here. And after this one, you need to wait for another candlestick to appear again, which is another bearish one, telling you that, okay, the market is continuing the downtrend. So if you take a look at it here, after the market took a very long downtrend here, then at this point here, this one is called the morning star, which comes from down. So it's not always accurate, but they are likely to appear all the time. So after it came up, then the market took a very uptrend. So you can see that the uptrend it took from here to this level, then created another evening star here. So this one below here is morning star. I'll be talking about it in my next video. And this one here is the evening star. The evening star comes from the top. So you cannot spot evening star from the down. It always comes from the top. So after that, you need to wait for the next two candlesticks to occur before you take your position. So whenever I sight this sort of candlestick, I wait to take my market position at this level here. I always take it at this level, which always corresponds with the third bullish candle here. So I always use the third bullish candle to take my position, no matter how long it is. This to tell me that, okay, the sellers are already overpowering the buyers in the market. Else, the market would have taken a reversal from this point again to continue its movement. So when you are trading, when you see this evening star, always wait for the next two candlesticks before you decide on which place to actually put your trade. So that is it about the second one on our list, called the evening star. So the third one is simply called the three black crow. So the black crow is simply known as the bearish market symbols. So for example, for me, I like using the green and red candlestick when I'm trading. So the green often refers to the, so now let me get my drawing tool. So you can see that this green here often refers to an uptrend, which shows that it's a bullish market. and then the red over here shows that this is a bearish market. So this is what I often use whenever I'm trading. I use the red candlestick to make it easier for me to actually understand. So now let me get rid of this and then smash what I mean by the 3 black rows. So over here, grabbing my pen again, over here you can see that here is, let me change the color. Let me use an easy to spot color so you can get it clearly. So you can see from this level here, you can see 3 bearish candlestick right here. I believe you can see these 3 bearish candlestick following each other at this level. Okay, let me use a very light color. You can see here is one bearish candle, here's another bearish candle, and this is a 3rd bearish candle. So whenever you spot these 3 bearish candles following each other, that's to tell you that okay, the uptrend is already getting weak. And if you can look at it carefully, you see that at this point here, the uptrend was already getting weak. If you take a look at it clearly, you see that the uptrend has already gotten weak at this point here. This point here, you can see that the uptrend is already weak from this level here. This will tell you that okay, the market is about to change direction and you should get ready to enter your trade. Then after this, you wait for the 3 black rows. So when I started forex trading at first, I used to use these 3 black row strategies to trade. Why am I using these ones? Because they are very easy to predict, and before these 3 bearish candlesticks can follow each other up to this level, that's to tell you that there's a strong signal that the buyers are already weak in the market and it's time for the sellers to take over. So these are things I often look out for. So now, for example, after these 3 followed each other, you can see that the market took a serious downtrend. After which you can see that the market took a serious downtrend from this level straight down to this level. You can see that the serious downtrend the market took was even longer than the previous one. You can see after here it made a very downfall here, then went upwards. From here it took a very serious uptrend before dropping back to this level again. So if you are someone who takes long trade like I do, like you can set up trade and then just leave them like that, then you are likely to be profitable using this 3 crow method, because they hardly appear, but when they appear, they are giving you 100% assurance that they are going to make you a huge amount of profit from their trade. So this is it here. In case you don't understand, let me show you on my board over here to give you a wider understanding. So you can see here, so from my board over here, you can see that these 3, you can see that the straight uptrend that here was actually picking up. You can see after this consistent uptrend, then it formed these 3 bearish candles. So after these 3 bearish candles, you can see that the market then took a reversal, despite the fact that a bullish candle appeared here. So this is one thing a lot of people get mistaken. So once they spot these 3 candles, they like jumping on into the market. But my advice is that once you spot 3 bearish candles like this, don't jump in yet. Wait for the next candle to appear, because once these 3 crows come up like this, there's an opportunity that the downtrend is going to continue, and you need to enjoy this downtrend by being patient. And you can see if you had entered this market after this bullish candle here, then you still have a high chance of making profit from this top level straight to this down level. So you can see this one is showing you the reversal in the market. That's why in a plain understanding, the 3 black crows simply signifies a reversal from an uptrend to a downtrend. That's simply how these 3 black crows are. So in case you don't understand anything, you can do it to let me know down in the comment section. Now moving to the final one, and if you are still watching this video, please consider subscribing, and more videos on trading will be coming up live, and at times I do some 1-2 live trade where you see me place my own trade as well. So the final one on our list is called the bearish engulfing candlestick. So what do I mean by the bearish engulfing candlestick? So the bearish engulfing candlestick is simply a candlestick that is signifying a downtrend from an uptrend. So for example, when you are trading, however, before we move on, let me tell you, this sort of candlestick appears rarely. It rarely appears when you are trading, but trust me, most of the time you are going to spot it in stock markets the most. If you are trading the forex market, it's very difficult to spot it, but when it comes over to the, I don't know if it's easy to spot depending on the currency pairs you are actually trading. So explaining this one to the easy understanding, you can see that. So this one is telling you that the bearish candle should be able to cover the before bullish candle. So over here you can see that here is a bullish candle here. So changing the pen color, you can see this bullish candle over here, which is in full green. And you can see that the next candle should be able to cover the whole of it. And you can see that this bearish candle here covers the whole of this candle over here. However, after spotting this candle covering this one over here, it doesn't mean you should jump into the market yet. Reason being that the next candle is still the official decider. So before you jump into this trade after spotting a bearish engulfing candlestick, the next thing you need to do is to wait for the second candle to appear. If the second candle is also a bearish candle that has gone way below this particular bearish candle, that's to tell you that okay, the market is a pure downtrend. So explain, you can see that the second bearish candlestick should be engulfing the body of the first bullish candlestick. So before this bearish candlestick appears, it first of all comes with a bullish candle. That's why I said we are trading the bearish market, always looking for a downtrend to trade on. So you can see that this was a consistent uptrend that went up, went consistently, came down, then continues another uptrend again. Then after it got to this level, it created a very thick bearish candle that was able to cover this one. So using an easy way to understand what engulfing means, engulfing is simply covering the before bullish candle. And you can see here, this one actually covers the whole of this bullish candle to form a serious downtrend. And whenever you spot this one, this to tell you that the market is going on a serious downtrend. So when trading this downtrend, this one thing I always advise, if you want to enter the market and then set your take profit and stop loss, I always advise that your stop loss should be a bit above this level. Sorry, my hand is not actually straight. A bit above this level, which is from here to here, because you are entering the market at this level. So your stop loss should be at the midpoint here. The reason why I use this midpoint here is because so you don't have to lose much, because your take profit will be around this level if you trade with fear, or if you don't trade with fear, then your take profit can be around this level, because I stopped doing partial cash out during trading because I don't like it anymore. So when I enter a trade, I wait for it to fully go on. Like for example, take a look at this trade I entered. You can see I entered this trade at this level. You can see that the market is still going here and it's moving up and down, though I'm not afraid because I've not seen any serious signal that the market is going to go on. So for you not to mistaken on what exactly I mean by an engulfing candle, here is it in real life trade. So you can see that over here now, take a look at this one. This one is not called an engulfing. This one is not called a bearish movement. Take a look at it here. You can see that this one here, you cannot say this one is engulfing. Reason being that, let me use a rectangle tool to actually draw it out for you to see. So you understand why I said it's actually not engulfing it. So for example, let me draw this level. You can take a look at these two candlesticks here. You can see here we have a bullish candlestick that went up to this level. So when I'm looking at my engulfing, I take very serious note of the wick. You can see that this wick got up to this very high here, and then it created this. After the next one came a very serious bearish candle. However, this bearish candle did not engulf it. So what we mean by engulfing is that if this bearish candle was to engulf this particular bullish one, then it should take place at this level here. Then it should have taken place at this level here. So it should have taken place here. So if this bearish candle here started from this level, then that's to tell you that it has engulfed it. If it was able to take it from this level to this level here, then it has engulfed it and then created a next bearish candle again. That's to tell you that the market is a pure downtrend. But since it wasn't able to engulf it, then it's not a downtrend either. So here's another one here again. You can take a look at these two here also. You can see that this one here, they are equal in size in both everything. However, this bullish one here was able to beat it with a wick. The wick matters when you depend on the strategy you are using. Based on my strategy, I take a serious look at the wick when I'm trading. That's why I was able to use this wick as a retesting point. So you can see that at this very level here, this one you cannot say is engulfing because it's not able to close it totally. So you cannot say this is an engulfing candlestick. So when you talk about engulfing, it should be able to cover it fully just as it did here. So the second bearish candlestick should be covering the body of the first bullish candlestick in total to show that the market is about to reverse to a downtrend. So hope you find this video helpful. So don't forget to smash that subscribe button, like this video. Hope to see you in my next video. Bye.